Good day, everybody. It's Trent Klarenbach with the Klarenbach Grain Report. Today is December the 15th, 2025. I want to talk feeder cattle futures. I've had a number of conversations about this price action, these charts the last week or so, and I think it's time to look at it. This is the feeder cattle futures chart. It's the continuous chart, the next contract month in front, and it's using January as the price for the futures month. So this is a weekly chart here, and I got this red dashed line here. This is at just over 349, and that number there, that line represents an area where I suggested that a break below there, we want to start taking some, reducing our risk, taking some risk off the table, and that possibly that we are going to see a further decline in the price. And we did see that, but now we're getting back up to that level. Now, question is, do we want to hedge? And it could be a great level to start hedging. But if you notice, the price is continuing to rise on the weekly chart. Now we're one day into the week, but we're up a little bit here. But I do think that maybe we get up to that 349, 350 level, and before we find some sort of resistance. And I happen to think this is what they call a dead cat bounce. So we saw this nice rally in the price, the pullback. Often you get another rally up, so you get an A and a B and a C move down. So I want to see how the price reacts to that 349, 350 level. And I want to look at some different options for reducing my risk in that market. So right now, let's step to the daily chart. Daily chart's got a little more action on it, you might say. And it's interesting. So this green line here is the 50-day moving average. Now the 50-day moving average often acts as support, and then sometimes it acts as resistance. And that's what we found here, late last week on Thursday and on Friday. The price sellers stepped in at that 50-day moving average. Now the 50-day moving average is declining, so we can't be a bullish. So we are bearish on the intermediate time frame. We're finding some buying here today, but take a look at this. This is what I think is significant. So our 200-day moving average is still advancing, right? It's down at 320, 323. Price today is at 339. So the uptrend is still intact. The longer term uptrend is still intact. We're above our 200-day moving average. Gets a little confusing with this declining 50-day moving average. So we're finding some selling then. So we don't know what's going to happen, right? The challenge is, I really want to give this some more time. And the reason is, before we start doing some hedging, and the reason is this purple line here, this is the average price paid per contract, a feeder cattle future contract since October 14th. Okay, that's the average price paid. The average price paid per contract since the high is in the green. In the last 2 months, they're in the green. They're making money. I don't know. When you're in the green, you're less likely to sell, more likely to add to your position, less likely to sell. It's not until you start losing money is when you start to see kind of an exodus for the exit doors. So even right here, we're above this VWAP from last Tuesday, the last low on last Tuesday. It's hanging in there right now as we speak. So it's hard for me to get bearish, even though I think this is a dead cat bounce. The price action isn't confirming that this is a high, a local high, and we're going to see a retracement in the price. We really want to see some confirmation. Now, we'll see how the price reacts the next couple of days, but I'm going to be giving this a serious hard look at doing something at this previous support level. Previous support often acts as resistance. And see how the price reacts here. This could be an opportunity, even though we're above these moving averages. It could be an opportunity for some, short positions or make some sales if you can at that level. But I don't identify any low risk, high probability short opportunities at this time. And the reason is this: the longer term trend's still up. And if you're going to enter in a short position, maybe you can do a hedge. And maybe that's fine on your operation. Maybe that works just fine. But, you try to lose money on paper also. And when you don't have really anywhere to put the stop, it gets pretty tricky. So if I was putting a stop, I'd put a wide stop in and probably a small position size as a feeler. Feeler, I think, is the best word for that, a feeler trade, and just see if in fact we do get a reaction at this 350 level. But right now we're getting some mixed messages in the feeder cattle market. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.